Thank you. Thank you, Ieva. Thank you, Dainius. So please stay in the panel, which will follow, because with this fund you will become also one of the institutional investors in the Baltic capital markets. So you have a seat at the table. You will have a seat at the table. But now we will start the last panel, which is dedicated to Baltic institutional investors. We branded it local expertise leading to higher returns. So we're going to talk about whether really local assets are bringing superior returns to international markets. And to discuss those issues and other issues related to institutional investors, we have three distinguished panelists. First one is Mr. Kārlis Purgailis, who is CEO of CBL Asset Management. Kārlis has 24 years of experience in financial markets, mostly in treasury and asset management. And since 2015, Kārlis is part of CBL asset management team. And for a couple of years now, you're CEO of CBL Asset Management, responsible for 1.2 billion euros in assets under management.
That's right.
Thank you for joining the panel. Next speaker is panelist is Frank Oliver Lehmann from THELO Capital. Frank Oliver is partner and chief financial officer, right? Or chief investment officer, sorry.
Yeah.
Hello. Thank you for joining. Frank Oliver has interesting experience of not only investing in fixed income, but also being part of a bad bank in Germany. So Frank Oliver has faced also bad situations when some investments go south and what needs to be done in such cases. And third, but not the least, Andrius Barštys, who is co-founder and CEO of Capitalica Asset Management, a leading alternative fund management company in Lithuania, investing in real estate and bonds. And Andrius has over 25 years of experience in capital markets and real estate. And his most notable real estate projects include Verde, two Verdes now in Riga, and Kauno Dokas in Kaunas, Lithuania. Thank you for joining us. Okay, so let's start the panel, and I think we have heard from Ieva and Dainius about the initiatives which national promoting institutions are playing in or plan to play in development of the local capital markets. I think one of the interesting initiatives is guaranteeing bond issuances, so that's something which really quite a novel initiative. At least in Latvia we haven't discussed it, so we'll see how it goes in Lithuania. But maybe let's start with a different issue related to how local assets, bonds, equities, real estate, how attractive are these assets, and why we see so little interest from international investors. But let's start maybe with Kārlis. In terms of local pension funds perspective, maybe I'm going to be a bit provocative right from the start, because statistics shows that in Latvia we have only roughly 7% of second pillar pension fund assets invested domestically. So Kārlis, two questions to you. One is how do you see a risk-return perspective of local asset classes in financial market? And second, what are the obstacles for second pillar pension funds to be more active in these segments in the Baltics?
Yeah, historically, I guess we've been one of the most active institutional investors in Baltic capital markets, especially on the public market side. And yeah, we do also, apart the pension products, specialized mutual investment funds focusing on Eastern European fixed income, where Baltics is quite substantial part of the fund. And in general, yeah, we see that the returns produced by local bonds are somewhat higher than compared to other regions. And yeah, the reason for that is that there is a certain liquidity premium priced in those instruments. Yeah, our two actively managed pension products have almost 20% allocation and exposure to Baltic market at the moment, yeah, that's basically the ceiling that we can handle. But in general, we see that there's a huge disproportion of scale from the issuance side and the pension fund asset side. The bonds and equity IPOs that we've seen here are very small for the pension managers, and it's quite hard to make efficient portfolio from multiple small issuances, and the portfolio gets very fragmented. Therefore, we've already for several years been looking at this market gap, and actually we are working on the product that could work as an aggregator of the funds for the institutional investors. We are trying to launch the fund, alternative investment fund, that would invest in small SME issuances in Baltics, and then the investors behind that fund would be pension funds, banks, and insurance companies, and hopefully that initiative goes out early next year, and we believe that together with ALTUM and ILTE's IPO fund, that would be a quite substantial boost for the small issuances of bonds and even equities.
Yeah, interesting, great initiative. And when do you plan to launch this product?
Well, currently we're working on the legal framework of the product. There is some to-dos in-house, and actually we're waiting for regulatory change for the pension law in Latvia that would allow this fund to be treated as a bond exposure for pension funds. And hopefully that's passed through by the end of the year, and then we would be ready to launch it.
Okay, good. Thank you. So maybe to you, Frank Oliver, you are one of the few probably international institutional investors present in the local market. So maybe tell us what's pros and cons investing in the markets from international perspective.
Thank you, Robert. So first of all, we of course have the opportunity to put our money in different markets, and the Baltic market is one of them. So the point you just made about diversification is of course not something we faced with, because we play in the Euro high yield market, we play in the Nordic credit market, and in the Baltic market. For us, what we really have developed over the years is a very intense due diligence process, and we are looking for very defendable, top-notch managed companies. And then for us, because we have very patient capital, that's probably a difference to many others, we can also invest in smaller issues, because we're not necessarily confronted with the redemptions. And for us then, we're okay if the issues are small, but they are playing a part in the bigger scheme of our portfolio, where we have about 40, 50 names in there. And we rely very much on a long and tested due diligence process. We set up the fund about 8 years ago, and at that time I have been in the market myself, in capital markets, more than 20 years. So over the years you have seen a lot of defaults and different things happening, and you're getting nervous about certain industries, et cetera, et cetera. But what we're finding in the Baltics, we're finding the entrepreneurs. So I find that quite an interesting market. We're finding attractive yields. And as long as we overcome the issuing size, which sometimes is 10, 20 million only, which makes it a small issue on a European scale, we're okay with that. So we overcome that, we get compensated, But we have to be absolutely convinced about the credit story. And if we hear very good, convincing credit stories, we will work out something to invest. But it's not the other way around, right? Sometimes, of course, in the Baltics, you can also get double-digit returns of companies which we wouldn't touch. So we're really for the quality of the management, quality of the companies. That's our game.
Mm-hmm. And we've been talking today at this conference also about the settlement issues, and is that something you're sort of facing also?
Yes, we face that every time again and again, but then we work with the issuer and the banks associated with that, because we have our custodian is a bank in Munich in Germany. They run accounts on Euroclear and Clearstream, but there's a bridge, and I'm not so technical about it, but there's a bridge where we basically manage to settle out of the Nasdaq CSD into our Euroclear and Clearstream, and then we need to fulfill a few other requirements because we are BaFin registered, which is kind of the German regulator. We need to have a data source, and we need to have the data source from one data provider that has been appointed by the regulator to be the data source, the reliable data source in Germany. And once we have figured that out and done all this, which is a bit of a work, but that comes with our wish to invest, and we have people who help us on that. But it can be overcome. It's not an issue. Robert, if you want to talk about the Capital Market Union in Europe, that's where the hurdles are, right? This is where the problem is, and but right now we're helping ourselves, and for us it's not an issue. I can see a lot of big issuers, big investors who kind of have problems with that, so that's why they're staying away, right?
Okay. All right. Andrius, switching to real estate as an asset class, basically, I know you have started also investing in bonds recently and launched the first product which is invested in local bonds. But maybe let's talk a little bit about real estate perspective, because your way to invest in real estate is basically to have alternative funds, which effectively also capital market instruments, which then in turn invest in real estate and deliver certain profits to the investors. So maybe tell us a little bit about how you see the market, real estate market, how you see the current and potential returns, and why do you think this type of investments is also attractive vis-a-vis Western European peers?
Thank you, Robert. Well, we do invest into already existing buildings, but also we can develop. And our largest development currently, probably well known in Riga, it's a Verde project. And when I was trying to enter this market, many people were saying that don't go please to Riga. There will be lots of heavy things, bureaucracy, etc., etc. In fact, I never had any problem in that perspective, and I think there is kind of maybe a little bit too many rumors around what is the situation people are thinking and what is the real situation, and we clearly see the opportunity. And speaking about investment landscape here in the Baltics, we clearly see that we can earn much more money into these projects than in western part of the world, because properties here are less, the values are much lower than in western part. And it not only related with the real estate, but also with the equities on the stock exchange and other types of asset classes. So I think that if talking about Baltic markets, either it is real estate through funds or equities or other instruments, there is a lack of capital. And mostly we are talking about local capital, which mostly comes from the institution. These largest pension funds, they are great guys who are managing these, but majority decisions are coming from the Scandinavia. And there is not many incentive for these people to invest in local market. And I think this is probably should be somehow regulated, that at least part of the assets should be invested in the local market. And then we can get high values, high liquidity, better functional markets, better financing opportunities, and also local capital working for local people, for local business.
Mm-hmm. Yeah, this idea, I remember this idea comes up once in a while, that it would be good to have this clause in local legislation forcing second pillar pension funds to invest certain part of assets in the country, but it contradicts European sort of union capital movement rules. So that's why I think it's, my personal opinion, it's quite unlikely, but maybe that's something we can take as a takeaway for discussions with legislators and with the regulators going forward. We actually have some questions here to Invega and ALTE. So the question is why Estonia does not participate in this IPO fund?
Yeah, that's a good one. We were supposed to put additional gray man in.
Everybody sort of expected it, yes.
Yeah, so the beginning of the talks was already several years ago, and Estonians were participating, and colleagues were there, but as the time passed, so Estonian capital market development, as we saw in the slides and we all know, went a bit further, and they somehow at the one point they lose the momentum of that this potential vehicle specifically would somehow help to boost their capital market. So it's not a lot of amount of money in terms of currently their capital market capitalization. So they decided to have different activities. But we nevertheless have other activities altogether. We all do invest in Baltic Innovation Fund, for example, together with European Investment Fund. We have volume 1, 2, number 3 coming, and that is also a lot of money in there. Baltic Innovation Fund 3 is supposed to be around 200 million euros fund of funds. So we do initiatives with Estonia as well.
Okay, and then the question to ILTE, or maybe it's to ALTUM, to both of you. When will ALTUM launch in Latvia a program similar to ALTE's Raspberry, which has proven to decrease default rate on SME loans and operational burden on the fund? So is this Raspberry, is this something you've been talking about this guaranteeing part of the bond placements, or it's something different?
It's a guarantee program. So for we call financial intermediaries or banks and other credit institutions who are providing credits to small corporates. This instrument was effective from various angles. First of all, it improved access to small corporates to financing. And for banks and credit institutions, they got bigger comfort in providing those financing, because they knew that we're kind of sharing the risks with them. This on one and on the other hand, this instrument helped especially the small financial intermediaries to gain additional business volumes. And in addition to capital markets, one more of our interest or priorities is to help small banks and small alternative lenders to strengthen, to start building up a competition to large banks who are dominating all 3 countries. The composition of banking sector is very comparable. Several Scandinavian banks are dominating and dictating in general the rules, and make the entrance of other potential banks quite hectic for new guys. Yeah, so So that instrument is quite a success. And if we speak about funds and asset management, today I think I can share one more news. And in Baltics, we don't see that such asset class as a private debt would be material. We have some attempts and some smaller funds who try to do it. We believe that this could create a good alternative for banks in general, and in addition, and could complement public debt with some private debt. And I know that some fund managers who want to launch private debt funds, of course, they will be investing into private debt as well as to balance their portfolio. So the news is that from ILTE side, we are allocating 100 million euros, and we signed a deal with European Investment Fund. We grant them a mandate to do the selection of the funds on our behalf. So EIF is allocating for Baltics for private debt 100 million euros. We are allocating 100 million euros. So the challenging part will be for the teams to fundraise and to find the other 100 million euros, and I guess they will be coming to Kārlis and other guys to fundraise for the rest. So this will be one more test for institutional local investors. Are they ready to support the alternative asset class in Baltics and help to emerge a new asset class, private debt, which is extremely sizable in US, which is very visible in more developed financial markets. So we believe that this could help our economies to grow.
Mm-hmm. And I guess in Latvia we have a program similar to Raspberry.
Yeah, I don't know what's the specifics of colleagues' specific guarantee, but we do have guarantees. So our current portfolio is around 43% of all ALTUM's portfolio is guarantees. So we do starting from individual to portfolio guarantees, and this we just launched next phase of portfolio guarantees, and also alternative lenders are welcome there. So we are expanding our support, and participants can join in. So yeah, we do that.
Okay. Switching back to the capital markets, basically. So we established that local assets provide better risk return profile, better returns than Western European ones. We have established also that the main problem for international investors and local institutional investors to invest in the market is liquidity and depth of the market. But what about investor protection? I think that's also quite an important item, because once in a while some of the issues might run into problems. So maybe Frank Oliver, how does it look like from international investor perspective?
Yeah, this is actually a very good question. When things go wrong, and if you have a portfolio of 40, 50 names, there's always one or two of these children that kind of gets off the proven track and disappears, or is a problem maker. Look, we have been lucky so far. We never got involved in a deep workout in the Baltics. What I have been observing on some of the cases is that there is, in one particular case, I don't want to name it, but there's a difference between the insolvency practitioner and the court, and then it gets kicked on forward. And I guess what the market needs, it needs to evolve. It needs to have done this a few times, and then I think we will have a platform how this gets worked out if things go wrong. You see, in the Euro market, what we're observing today is a super aggressive side of the issuers, because most of the issuers in the Euro market are private equity owned, and the private equity owners, in comparison to classical owners, wealthy families, people who have built up their businesses over many, many years, the private equity owners do have a super sophisticated way how they, even when things go wrong and bonds don't perform anymore, how they still can extract value for them. And that value goes, of course, on cost of the bondholders who have to either accept a haircut and do different things. So that has evolved in the Euro market to become a real hot topic, and therefore the private equity owners, to some instance, have to pay a premium on the coupons when they issue, because people know if things go wrong, this is kind of not a friendly situation. Now, this is the Euro market. The Euro high yield market, that's 200-300 billion euros outstanding and about 80-100 billion printed a year. What we observe there sooner or later will arrive in the Baltic market, and therefore, from my point of view, a good protection is, of course, the due diligence I mentioned before, but also is that you have an owner that is constructive and not a super aggressive PE fund that kind of says, well, here are the keys, thank you, goodbye. We have had that observed in the Euro market. So that's a little bit the game that's going on there. It's evolving. Things are becoming more aggressive. That's my observation, and therefore, you know, again, it puts all the onus back on the due diligence. What you buy, think it through. When things go wrong, are you dealing with, for example, KKR, which is a very amicable private equity owner, or is it someone from the tier 2 out of the US who kind of thinks now things really get interesting because they can take away your bond notional?
Yeah, interesting perspective. So Kārlis, how does it look like from local institutional investor side? I mean, do you think that investor protection is a problem here?
Well, here I could complement to the previous panel where the discussion about the harmonization of regulation took place, and actually what we see that even on pan-Baltic level, the insolvency processes are not harmonized, and each country has its own legislation and rules here. And for us locally, yeah, it's a bit easier to take a look at those differences and take into account those. But for larger international foreign institutional investors, I guess that's additional burden, and they don't want to waste their time and money to do legal due diligence on the small market like ours. That's on one hand. On the other hand, if we speak about the private investor kind of protection, then my belief is that MiFID regulation should be reviewed and upgraded, because it was developed like 2008, 2009, then complemented with MiFID II regulations later on, but the approach has been outdated, and currently the private investor is so protected in many cases that they cannot even get those investments even if they want to. And actually, without the retail investor segment in local market, institutionals alone won't be able to do a meaningful push for the development.
Yeah, I know there was an initiative to sort of to ease somehow MiFID II legislation, but it seems that it has gone nowhere, unfortunately, because really there are even some anecdotal evidences about investors not being able to access relatively simple financial instruments just because the service provider implements this legislation just with a very thorough diligence. Yeah, so that may be another takeaway of this panel, to take a look on a European level on MiFID II legislation. But maybe let's talk about risks a little bit, especially in the light of yesterday's or 5th of November US elections. I mean, obviously there is certain nervousness probably in some of the minds of local and international people, but and we see some reaction in Twitter. But maybe Andrius, how do you see it? Would you think that sort of demand and interest to invest in real estate projects, or in general invest in our region, would would be affected somehow by these recent elections in US?
Well, I wish to know how it affect, but I can just elaborate a little bit about existing foreign capital for the investments into real estate and also into the capital markets. Actually, it became our region became less interesting for Western part institutional investors currently. This is why I was talking about local capital, because if we have local capital existence, especially institutional ones, so then it makes even interesting for these Western money to come, because there is a liquidity, there is larger games, and there would be more private equity funds. So, for example, here in Baltics, we have very small part of the companies owned by private equity, as you correctly mentioned, and not the case in the western part of the world. There are many times higher capital allocated through private equity funds. And who are the main investors in these private equity funds? It's usually these pension funds, insurance companies, and other institutionals. And what we have here in the Baltics, actually we have pretty large gap. Why it's so? So it's a question which we have to answer. And I think I'm already in the capital markets almost 30 years here, and we are talking all time about how to make capital markets more attractive, how to make it working better. But I think it is a pretty simple question. We have to somehow force or find arguments institutional capital to be there, which is actually local capital, but it is invested somewhere else, not in the Baltics.
Yeah, I agree. That would be great. Okay, any more reflections on the risks of the region? Okay.
Maybe I can as well add up a bit. We act as LP. In Lithuania, like I was already saying, we are an LP in quite big number of locally managed funds. This is one of our priorities, to help funds to be launched. As well, we look from a macro perspective what the state would benefit, what the economy would benefit, and we announce those invitations to come up with the teams, with the strategies to fundraise with us. So and this is a big issue. All of the teams with whom we would be ready to commit, they struggle to fundraise. And all of the teams are visiting all the same pension fund managers, and there are so few of them, like 3, 4. And to raise bigger funds, it's a big issue. So besides ALTUM, Estonian Development Agency, and us, and EIF and EBRD, very few other names we can hear, or almost close to none. And this is a big issue, and this is a big obstacle for the further development. And somehow we have to unlock the interest for big institutional players to this region. Of course, our funds are very small, the tickets are very small. Maybe this is as well kind of killing the interest. So maybe the funds should aim for a higher, for a bigger size. But still, this is a big issue of our region. Of course, in Europe in general, this asset management is largely financed by public money, in opposition to US situation. But still, somehow we have to find a way how to attract. I still, during 1 year in my current position, I was not able to find this magic cure, what could help. But this is the issue, the biggest elephant in the room.
I think one of the things is basically not the answer to all the problems, but one thing is that we start investing ourselves, and then the other European market players will follow. We had one discussion with institutionals this summer, and they were saying basically, show us that you invest, and then we will have the opportunity to invest alongside. So basically, that is the first answer. We will have to be able to serve the region ourselves, and then expect to attract. But we will need to be the first one. Nobody will give you the miracle cure and say, okay, we will be investing, and you can then invest abroad. So that's why I think, and also we have to cooperate on Baltic level. So we are too small, this market is too narrow to do it alone. We are not interested on that scale, and to put some fund capital activities together, I think is a first step that we can show that we have some impact in the market, and that some of the interest is there for other institutional bigger ones.
Okay. With regards to the local regulations, I mean, Kārlis, is there anything which you think should be improved to facilitate second pillar pension funds investment? Because I know there have been a lot of changes gradually made into this legislation, and you mentioned another one being sort of planned before the year end in order to make this fund you're trying to launch treated as a bond fund within your portfolios, but maybe there are some other things, or it's all like up to the market forces now to make you invest more.
Well, I can speak on Latvian situation because we are not operating in Lithuania or Estonia. I would say in Latvia the regulation recent years have been upgraded multiple times, and we are at the stage that there are no actual obstacles to invest in local markets, on one hand. On the other hand, when we speak about pension savings, we need to take a wider perspective. If you look at the Latvian pension savings, then from 8.5 billion euros total savings in second pillar, there are 20% of assets managed in the passively managed pension funds, meaning that those are invested purely in index trackers, and Baltics are not on the map for those funds. So we can take 20% away right away. In addition, additional 30% approximately are managed kind of semi-passively, meaning that they are invested in third-party funds. They are basically the asset allocation products where you do not do the bottom-up active analysis, etc. So half of the total assets are basically taken out from the possibility to invest in the market, and that's in many extent dictated by the customer, because customer can choose which fund he chooses. And the rest 50%, if we look at our two products which are actively managed, as I mentioned, almost 20% are already invested in local economy. And those are not investments in government bonds, those are corporate bonds primarily. And from the risk perspective, if I look at this question as a citizen and the saver, my savings in the first pillar is fully kind of exposed to Latvian government risk, in risk perspective. So I would like to have my second part, second pillar savings to be a bit diversified and not focus only on Latvian risk.
Mm-hmm. Yeah, there is no money in the first pillar, basically, right? So it's, but to continue on that, and to reflect to the previous panels discussing the sort of listing of the state-owned companies on the stock exchange. So basically, let's assume that out of these 4 billion valuation of the state-owned companies in Latvia, let's say 20%, 800 millions is listed. So, I mean, roughly, how big allocation could be from CBL side to this type of, you know?
Well, I would avoid to state numbers, but in essence, the listing of state-owned companies, I believe, is more to activate the retail segment, which we saw in Estonia and also in Lithuania. And in Latvia, the retail segment is dormant, basically. They have their savings in the bank deposits. And not having the retail segment in the market leads to the outcome that there is no secondary market. Basically, even if the pension managers buy something, it's more buy and hold strategy rather than active trading, etc. So basically, we cannot get the market liquidity without retail. And yeah, those large tickets of state-owned and municipality-owned companies could activate this market. And yeah, if you look at Nasdaq Baltic, then it's monthly roughly 35 million turnover in the whole region, which is basically nothing for the secondary market. So we should think not only about the initial offerings, but also how to activate this secondary market.
Okay, interesting. We have a couple of questions related to taxation, and they addressed to Ministry of Finance, but since there is nobody from Ministry of Finance here, then maybe I will just try to address one of them, because I really believe that the taxation regime in Latvia so far is quite positive for the capital markets. And the question is, more incentives are needed, for example, tax incentives. Instead of tax rate for the private individuals is increasing from 20 to 25.5%. Why? So basically, yes, I fully agree that increase in taxation doesn't lead to incentive to invest in the capital markets. And I remember times when we had 0% personal income tax on deposits and also on profits made from capital markets. But I think that the fact that we have in Latvia this regime of ieguldījumu accounts or investment account, where you basically all the money you placed into this account, you can keep it for as long as you want and pay no taxes, declare no transactions on this account until you actually take the initial investment amount out of this account. I think this regime provides basically zero taxation for a very long time. And for those people who don't really want to withdraw money quickly from this account, that's a really unique taxation proposition. And vis-a-vis corporate income tax, we also have, so far we have zero corporate income tax on profits which are staying in the company. So if you don't take out dividends, you pay zero, which basically makes it also relatively attractive to invest in capital markets. So I think that in my personal opinion, Ministry of Finance has, or the government for that perspective, has done quite a good job in putting the right incentives in place and then balancing the budgetary needs with incentives to invest in capital markets. Okay, so we have 4 minutes left, so maybe let's have a final word. So let's maybe start with promoting agencies. So you're positive, and I hear a lot of you have a lot of programs and a lot of initiatives, and you're very creative in supporting capital markets. So I think that's something you're gonna be moving forward.
I was talking today with one of the market players and saying so that hopefully this is the first one. So we understand that 50 million from us and additional 50 from the market will not solve the problem. You see, it's 100 million euros. But in upcoming years, when we finally will move Latvian state-owned companies and municipal companies to the market, activate the retail segment, etc., so that we will become more also into development. This is also the first time that we do invest in this fund from our own balance sheet. We are not using any structural funds there. So we really do believe that this is a story that will succeed, and yeah, this is the first step taken.
Yeah, so I was listening to what Ieva was saying. Yes, from a promotional institution perspective, we're trying to do kind of to act as a ecosystem player. So we try to work on all ends. We understand that investors have still quite low financial literacy. Would this be retail? Would this be corporate? So we try to work on that. We try to unlock the access to borrowing, because like you saw from what Ieva was showing in statistical figures, lending through banks is very low against GDP, extremely low. Capital markets are adding up bit by bit, but not sufficiently enough. So we take an active role in providing guarantees for the banks. So now we start providing direct lending with billions. So some of our banks become a bit upset that we step into their territory, but they're not active there. So so we will be active, and especially in case of Lithuania, this post-merger, when 4 small development agencies was merged into one, now it gives a possibility for us to accelerate on our competence, accelerate on our resources, to attract additional resources. So we'll be launching new financial instruments. Would this be to support borrowings, to support capital markets, to support going public with equities. We will support asset management for sure, so private debt, but we'll continue with VCs and most likely with private equity. Now our new mantra is around infrastructure. Lithuania has huge infrastructure needs. Would this be military, roads, railways, and European structural funds have drained. So this is one more of the reasons why it is so important to increase the attractiveness for foreign institutional big investors. State budget alone will not be able to fund it, so we have to package it in an attractive way. Would this be concession? Would this be PPPs? So all of those new initiatives will create the possibilities, both for developers to engage into new business ventures like PPPs, but as well PPPs most likely will produce some public debt assets to invest as well. So so the cooperation between ILTE, ALTUM, Estonian institution would be important, and we will discuss more about similar ventures. But we believe that national promotional banks have an important role here. Would this be supporting asset management? Would it be supporting lending? So and we try to be very open to the market to discuss so what are the real needs in order to respond with correct facilities. And we can do quite a lot, whatever it helps our economies and financial sector.
Okay. So, Kārlis, we will wish you good luck with your fund, right?
Yeah, but as a pension manager, I would urge governments in all 3 countries not to play around the pension systems and spoil the system, because obviously that builds up the systemic risk and uncertainty. Also from the investor's perspective, for us as the managers, and that definitely doesn't help to make long-term illiquid investments in private debt or real estate or other alternatives.
Yes, that's true. And yeah, Frank Oliver, any wishes?
I think it's just from, if you invest in credit, diversification is the absolute must. So if you want to invest in a pan-Baltic credit fund, I think you just constructing it bottom up, you need 25, 30, ideally 40 names. And it's not necessarily that you need liquidity, because that can be managed with the rule how you redeem, how you let your investors redeem the capital. But just for the performance to hedge yourself against 1 or 2 defaults or workouts, you need at least 25, 30 names. You will unlikely find that in any one of your 3 countries, so that automatically lends itself for a Baltic solution. And I think once you have that and you can show a track record, that could be quite an attractive proposition, because one observation from my point of view is clearly that I think the banking industry in the Baltics has a lot of private equity owners, and the private equity owners do look at huge returns on equity, and those returns on equity are effectively financed by this lending. So that's why I think the credit fund could be an interesting alternative against bank lending, which might be a little bit overpriced currently from my point of view.
Sure, I agree. Andrius?
Well, to develop markets, we need money, right?
Yeah.
It's the most important, probably, element of that.
Sure.
And actually, good news that money exists in these pension funds, but these guys are so lazy.
We need to push them, right?
Yeah, it's,
Especially Scandinavian-owned. They are so lazy that even government institutions starting to invest into private equity venture capital, but these pension funds are not, or very small amounts. So I think we have to somehow find a way how to unlock this money, and then capital markets will be established much better.
Good. So with this takeaway, we conclude the panel. Thank you, fellow panelists, and let's enjoy the rest of the day.
Thank you.